let's turn to the advisory now, and with a specific focus on your SMSF investment strategy. With markets coming at a position of strength, Rob Gilmour from Wealth Simplicity joining me. So you're saying this is exactly the right time to act here because we do have markets at or near record highs.
Well, look, that's right. I mean, it's always good to consider your strategy from a position of strength rather than waiting for markets to panic and then wishing you had done something a little bit sooner. So we have been seeing a lot of strength and momentum in equity markets for most of this year since we had the tantrum around tariffs in April. And that strength has continued through to September, which is traditionally a weak month. And so we're probably in a scenario where that momentum may continue on to the end of the year. But it's important not to be complacent. And if there are changes that need to be made and some forward thinking around those changes, then it's always good to be thinking about that when times are good rather than when things start to get a little bit out of control.
Absolutely. And what's really interesting is the amount of Aussies that are taking control of their wealth here, right? And this latest data showing, I think, something like SMSFs holding $1 trillion plus in assets. What does that tell you?
Yeah, well, that's definitely the case. It's the trend. So there are more SMSFs being established each month than they are being closed. And that is a case of younger people adopting SMSFs. There are still majority of people who have an SMSF are over 50, and there are about 600,000 funds which have that $1.2 trillion of assets. So they are naturally in the more higher net worth segment. But it's interesting to sort of pick it apart and look at the asset allocation and what people are actually doing in terms of their own decisions around asset allocation and how they're managing their SMSF.
But is it still a case that you really need to make sure you've got all the right advice in play? Because we saw the collapse of those super funds recently where people lost all of their money. So if you are moving into managing it yourself, I gather you still need to know what you're doing.
Look, absolutely. It comes with responsibilities. You're the trustee of your own fund. There are compliance obligations, but you are looking after your retirement nest egg, and that is a big responsibility from an investment perspective. And it is important to be getting advice. And look, there are a lot of SMSFs out there that are really unattended, and they might be legacy SMSFs that have been sitting on assets for a very long time. They might have trustees that have passed away, and it's a family situation where maybe the family doesn't know what to do with the SMSF. And it's really important to be constantly monitoring and being engaged with that and being aware of the responsibilities of looking after those retirement assets.
So what are some of the questions that you would tell people to ask, either their advisor or themselves when looking at this?
Well, when it comes to advice, obviously in the headlines, we have seen the major collapses of Shield. And I think what a lot of that comes down to, and people were caught into that, really where the advice was conflicted. So I think if you are going down the advice path and you're looking at options for investments for your SMSF, you've got to think if it's too good to be true, then it probably isn't, and be very wary. And that's where it's important to be vigilant, look for conflicts of interest. But I think thinking about your objectives, your strategy, and making sure that those investments are aligned to that strategy. And maybe when you're getting older, having a portfolio that is heavily weighted just to a few stocks and listed securities in a portfolio is not appropriate, and there are other alternatives and assets out there that you should be considering, and getting some well-rounded advice around that strategy, or even considering what you should be doing with that SMSF in the long term is really important.
And finally, I guess what you should be doing around succession and estate planning too.
Yeah, and that's right. So dovetailing off to that, sometimes it may not be appropriate to keep an SMSF running. And we do close them down because circumstances change and family situations change, or the balance doesn't justify it. So it's important to think about, well, is this the right structure for me? And often it can be, and it can be very useful in an estate situation, particularly when you're dealing with a significant amount of assets. But it's always important to understand the implications of an estate situation and planning who will be controlling the assets or the SMSF, and making sure that those contingencies are put in place.